May 18th. I think it's a Monday night. And after I give you the review of the account, I'm going to show you some things that you could be doing before buying that stock in Robinhood or any other platform, really, any other online broker. This, of course, is the video log that takes 30,000 to a million. And here's my account. I'm sitting up. That is not my account. This is my YouTube channel. But, no redos. So this is the Robinhood account. It's got a facelift. Sitting at 81,476. Well, that's quite a bit more than my account was last time, right? Yes, I didn't add any money. It's just the account appreciated $4,000 over the weekend, mostly because of this huge rally we got on Monday. The markets were up, I think, over 3%. It says here I was up 3%, but it's actually more because of the pre-market activities. It was actually up $4,000 or so in total appreciation, so that's almost double. I'd say about 5.5%, maybe a little less. So this is the account. If you're really interested in all my positions, these are the options. You can pause the browser at any time and just look at the symbol here, and underneath is the date, the expiration date of my option play. You can find all the information here if you want to pause the browser. The numbers on the right represent the dollar amount that liability has either been erased if the number is green, or is added on if the number is red. Okay, so the numbers kind of work in reverse because most of these options are sells. Some of them that are buys are here near the bottom. I have some silver calls that are expire on June 30th. They're up $44 right now. These are more straightforward to think about. And then some SOV calls as well here on January 15th. They're up $46 also. Then Apple called, which is up $360. Now here we go into my positions. This EXK had a nice day today, even though the gold and silver miners were pretty flat. EXK was about 90. Apple up $600. Main up 167. Realty income up 284. These are kind of large numbers. Pretty good days in the market. NYMT up 144. RSX 223. Now, I don't really own a lot of these shares here because 200 of them have already been sold through option plays. So this appreciation is kind of capped out. All right. FAX plus 17. So any other big movers? Energy Fuels up 150. Camel Cobalt flat negative 60. URG plus 55. DEM Emerging Market Fund is up 256. That's kind of a lot. It's reaching the upper end of that barrier where I won't be getting much appreciation, but I'll still be collecting dividends up until the fall because that's when I have the call sold on DEM for 100 of those shares. ET, I've also have a lot of that pre-sold, so not all these gains are mine. Norwegian Cruise Line is up to $208, which is quite substantial. I also don't have all these shares, so these numbers are not that meaningful, but it gives you an idea of the kind of update the market's had today. It's pretty big. So Rio Tinto up 191. If you want to do the percentage terms, I mean, it's kind of hard for me to go through all the percentages and the dollar amounts. I prefer the dollar amounts because it feels more real, but you can change the percentages too. Okay, so to compare, I like to compare the account to the S&P 500. Obviously, the day is kind of hard to view, but I can take a look at the week. So week performance plus 1.21%. Of course, Robinhood had a little bit of an uplift. And now I don't know how I feel about the new color scheme. I'm not as big of a fan of the new color scheme, honestly. Kind of prefer the older one, but it is brighter. To each their own. I don't mind it too much, I guess. So the S&P 500 monster day, by the way. Even up after markets a little bit. On the week is only up 0.54%. I'm up 1.2 or something. So I'm actually beating the markets on the week. That's great. I'm actually beating them on the month, on the 3-month, and the year. I checked earlier. So I'm beating the markets on all accounts. The year is plus 4%, whereas I am plus. Hello. This is live. Robinhood. Perform 3 months, and this is the year plus 10%. So beating market by 6% on the year. pretty good. You can see the substantial dip here from about 90K to 47. It's pretty substantial. And now I'm back up to 81. I almost erased all my losses because of this aggressive play. So, okay. Now I want to talk about some things that you might want to consider doing before buying a company. Okay. So let's say you've snapped a company that you like and you're ready to pull the trigger on your Robinhood account or on your Webull account or your TD Ameritrade or E-Trade, or if you're really professional, you have an Interactive Brokers account like me. No, I'm not professional, but I do have an Interactive Broker account. It's pretty legit. You guys should try it. It's pretty good for research. Although E-Trade research tools are starting to be pretty good on the phone now too. I might recommend that as well. You can try that too. By the way, I'm obviously not sponsored by any of these companies. This is just my own opinion. I mean, this channel's pretty damn small for sponsorships. So, what are some things that you could be doing before you pull the trigger? So let's say you like a company. I like to use Apple for all my examples here because it's one of the biggest at least top 2 to 3 largest companies by size, by market valuation and capitalization in the world, and everybody knows Apple. So I like to use Apple, so I'm going to use Apple as an example of what kind of steps that I do most of the time and what you could be doing before you buy a stock, just to make sure that you know what you're buying. Okay. By the way, even if you go through all these checklists, is no guarantee that you're not going to lose money. Okay, you could lose money in the markets. So if you're not sure what's going on, or just to be safe, consult with a professional advisor before you put any money into the markets. Okay, now let's say I look up Apple, and the information that Robinhood is going to give me is probably not enough for me to make a value judgment. Now, there are analysts out there that do all kinds of work. Okay, they do this all day. They look at numbers, they look at the company, they review what's going on. They try to get as much information as they can about where the company's going to go. They try to read macro shifts and economic shifts and trends and all that stuff. And so you're probably not going to beat them. You're going to have your own unique edge, but it doesn't really hurt, okay, to be a master of one and a jack of all trades. All right, you should know a little bit of everything else that's going around you, and not just go through the world blindfolded, just relying on your one edge or your one thing that you do better than anybody else in the market. I have plenty of videos about market being a competition and all that, so I'm not going to repeat that. In fact, I had an interesting one, I think, interesting for me last time. Anyway, going into browser. So Apple is not going to give you much information here. Okay, so let's see what kind of information we get. It gives us, this is my own information, so that's not even going to be there before you buy. So it gives us an about section here. It gives us that it's got 137,000 employees. It's based in California. It's founded in 1976. It gives you the market capitalization of 1.37 trillion. Price to earnings ratio, this is kind of useful. Okay, useful number to know. Dividend yield, that's also very useful. Okay, 1.07% dividend. And average volume, which is pretty useful. I mean, you want to know how liquid the company is before you buy it. What else does it give me? It gives me the earnings, which is also pretty useful. So based on this data alone, we can tell that this is a profitable company. Personally, I really like buying profitable companies. Okay. I mean, I dabble a lot into the resource sector, and there are plenty of losing companies down there, and you really got to be careful of what you're doing. And a lot of the times, these companies will lose value. But if you're buying a regular company, like a retail company or some other type of company, I like to make sure, personally, that they're not losing money. So I will never put money into Uber or anything like that until they start making money. It might be too late by then. Okay? Might be too late. But unless the company is consistently profitable, I don't really like to hold it long term anyway. All right, browser. So the earnings. So this is basically how much they earn per share. Okay, their EPS. That's a number that you want to familiarize yourself with if you don't know already. Earnings per share. It looks like they, Q2 of 2020, somewhere around $3, something like that from this chart. Now we're gonna get into the numbers a little bit more in depth, but this is just an overview here that you're given by Robinhood. Of course, they also give you the Morningstar report, which is not that useful, honestly. I don't think it's that useful, but they give you a fair value, what they think that the stock should be worth, which is 240. And relative to that number, the stock is very overvalued, right, at 315. And they give you how uncertain they think the stock is and what the stewardship's like, whatever. I don't think that data is very relevant or important, personally. So that's about as much information as you're going to get from Robinhood. So you may want to go to other sources of information. One site that I really like is FinViz. I use this to kind of get a big overview, a quick overview of the numbers. So you saw that probably in my previous video as well, when I talked about the gold miners and compared them to Apple. So just quickly, I'll show you some of the numbers that I think are important. I think all the percentage numbers are most important. So over here on the left, you can't really see. I'm not going to move the screen, but you know, it tells you what the market capitalization is, which is what Robinhood already listed it. It gives you an income number of 57.2 billion. That's most likely yearly, obviously. So, and then total sales of 267 billion. It says the book per share, blah, blah, blah. But the percentage numbers are, I think, what the most important, because they don't move with the price of the stock. So the number that you can't see here is the dividend percent, which we also saw in Robinhood, which is 1.04%. Okay. Now, also gives you some recommendation. Over here, we get to numbers that you can see. So the price to earnings ratio. Okay, so that's pretty important. It's a very widely used statistic. It's 24.67, which is about on par. Okay, and about on par with other companies. Usually that's considered rich in normal times, but we're not living in normal times, right? There's massive liquidity everywhere and money's being printed everywhere. So this isn't really normal times. So this would be kind of like almost a fair valuation. So, but in reality, if you were purchasing just a business, you know, on the street, like you're purchasing a little stand or like a restaurant or something like that, if they had a price to earnings ratio of 24, that'd be extremely rich, okay? Because if you think about it, price per earnings, if the PE is 24, what that would mean is that it would take you 24 years of earnings to pay your money back from your investment. That's quite a bit. Okay, you might as well invest in bonds. All right. So it's pretty rich. Okay, so moving on. I like percentages here, but this can kind of be looked at as percentage. This gives you the forward P, so what the anticipated price per earnings is going to be next year. This is price to sales ratio, price to book ratio, and price to cash per share. All right, price to free cash flow. You can look at these metrics. I mean, they look okay to me. I don't pay too much attention to them. As long as nothing really triggers like alarms, then it's okay. Now the second column, the third column here, gives you the earnings per share. Okay, which is diluted earnings per share, which is 12, and then it gives you the earnings per share estimate for next year. Okay, the percentages though is what I really care about here, because these numbers are really meaningless without looking at the price of the actual stock. So I like to look at the percentage. So earnings per share this year, the change in growth, okay, is negative 2.6%. So not a good trend, but excusable, you know, honestly, given the circumstances around the globe. So our earnings per share next year is anticipated to be 20%. Okay, so quite big. And if over the next 5 year, 11.47% per year. So those are pretty positive numbers. Or 13%. That's for 13% for the past 5 years and 11% for the next 5 years. So these numbers, you can't really trust them that much, but you can trust the current one. So this number in red here, you can definitely trust. Sales quarter over quarter, it looks like they've increased their sales by 0.5%. And earnings per share quarter over quarter up 3.8%. So you want to also know this date here when the earnings come out, April 30th. Okay, and it's AMC means after market close. You can see it here. It tells you even this website. It says earnings. BMO means before market open, and AMC means after market close. Insider ownership for this such a large company is not that really important, but it just means that how many of the board of directors and CEOs, executives, etc. own the company, which is usually a good statistic if that percentage is high. So if you see that in a smaller company that the percentage is very high, then you know that the people are really invested, whoever are running the company are really invested into this company. So usually it's a good sign. Institutional owned, this number is not that important either. Insider transactions also not really that important to me. So institutional just means what percentage of the company is owned by institutions. So these are pretty important numbers: return on asset, return on equity, and return on investment. I'd say they're really, really good relative to most companies. I mean, if you see anything around 20%, that's really nice. A gross margin, also anything around 20%, to me is pretty acceptable and really, really good, worth buying, as well as the other margin numbers. If they're around 20% or higher, that's definitely a buy in my book. Payout, just the payout ratio for the dividends. So that means how much of their earnings they're paying out to their investors. And if this percentage is low, I think below 20%, that's really good. That means the dividend isn't costing them that much. So I guess 20% is kind of like the magic number that you want to look at, or that I look at. You can develop your own way of reading these numbers, but that's what I'm looking at here. And the other columns on the right here is just shares outstanding. It's a pretty important, and the share float is really important numbers for me, because that means how many shares out there that's trading right now. And you'll see why it's important when we go into the next phase of this, the evaluation of this company. All right. Let's see anything else that's important here. And these are just technical metrics that are really irrelevant to me. It just tells you about the performance. This number here that you probably won't be able to see is just the beta. I've talked about beta before, so it's really fun to kind of see what the beta is on this company. It's 1.15. So that means is that the S&P 500 makes a 1% gain. Apple is likely to make a 1.15% gain. And in the same way, it works in the same way on the way down too. Okay, well, yeah, I think we're done with the relevant numbers here. So another thing that you might want to look at is their balance sheet. Now, if you go to Google and just type in balance sheet, you might come up with their actual balance sheet from the website of the company that you're looking at. It might take you like a few seconds of searching, but you're going to find it on Google if you find their actual website. I found the Apple's balance sheet from the website. It could be a little bit of daunting thing to look at first, but once you start digging into it, you'll see that it's not that threatening. Okay, so I'm going to show you the most recent one here from the March quarter. And here it is. Now, it looks very daunting, right? Especially for someone who's never seen a balance sheet. Okay, look at it. It's scary. But don't be scared, okay? We're just gonna look through some relevant numbers here. Okay? So, how about we pick this number? It says total net sales. Okay, so what it says here is 3 months ended. So you want to look at the dates. So this first number is going to be from March 28th, 2020, and the one next to it is going to be from March 30th, so same time last year. So you want to forget about the 6 months right now. So you want to look at these first two numbers and just compare them, okay? Forget about the last two. Now, total net sales, you can see 58, these are in millions, so this would be, what, billions? 58 billion, 58 billion, okay? Just a tiny bit more sales in dollars since last March, last year. Okay, so let's say, excuse me, and it says here product, services, etc. Operating expenses, went up a little bit, 1 billion. Okay, this is a 9.517. That means, well, 9 comma 517. That means 9,517,000,000. Just, you can add on 6 zeros to all these numbers at the end. How about net income? Okay, so net income went up a tiny bit. I'm sorry, it went down 0.3 billion. So there you go. Earnings per share. Okay, we talked about this. Basic diluted. Now, how about numbers that I totally look at, which would be, this is total net sales. So if you want to skip through all these numbers, there it is. It says total net sales right here, and you can see it by category. If you want to break it down, the sales were just a little bit better than last year. The iPhones, so people bought less in iPhones. They bought more in they bought about the same amount in Macs, a little bit less in iPads. However, the wearables, they bought a whole billion more, 1.1 billion more in wearables, home, and accessories. Okay, so those are things like earbuds and iPad covers and iPhone covers and things like that. Microphones, I don't know, things that they sell, pens. Okay, and also services got a really big uptick from last year as well. So 2 billion more, right? So 13.348 or comma 348 versus 11.450. So 13 billion versus 11 billion. So you know that they did 2 more billion in services sales. The services sales is a really important component in my opinion, because the services doesn't cost you anything really. I mean, it costs you in maintenance. You still have to do the service, but it has no hardware to it. Okay, you don't have to physically build anything. It's just somebody sitting on the phone providing a service or something that's already automated. Like for example, somebody builds an app and they pay you a fee to be on the App Store, in the Apple Store, right? And so that's considered a service. Or for example, iMusic, okay, that's pretty much automated. Somebody has to review the music and everything, but once it's uploaded, everything is pretty much automatic. It's just money earned every time somebody listens to a song or something like that, or through contract or however they do it. But it doesn't really require much manpower, and it doesn't really require much hardware or real estate to run. So the overhead or the expenses of this type of business are very low. So I think it's very important for at least for Apple to have that. Okay, so it's interesting to break the numbers now. So you're probably feeling a little more comfortable, right? You know what an iPhone is, you know what a Mac is, you know what an iPad is, you know what a wearable is, you know what services is. Just by looking at these two numbers, you can compare this year's, which is the first number, and then last year same time, which is the last number. This kind of comparison is called a year-over-year comparison, or YLY. So whenever you see those 3 letters together, you know what it means. It means this, and that's what analysts usually look at. It's important. Now, here we go into some other numbers that are interesting to look at. So if we look at the dates, we'll know we're comparing March 28, 2020 versus September 28, 2019. Okay, so about 6 months, right? And we can see total current assets went down. Total assets period went down by about 18 billion. Which is not that big a change. I mean, understandable considering the situation. Total liabilities actually also went down. So they paid off some debt, right? They cleared off some liabilities, or they bought up some shares, which also counts as liability, by the way. Shares outstanding. So net current liabilities, total liabilities, 241 billion versus 248. Sorry if you can't see it. 241 billion versus 248 billion. So total liabilities is bad, right? Like debt. Went down. So they're in a bit of a better fiscal shape or financial shape than they were 6 months ago. Even through the crisis, they just owe less money and they have less interest probably to pay for it, right? So that's actually helping out a little bit. So let's look at total liabilities and shareholder equity, right? Here's the shareholder equity. It's considered a liability, basically. It's 320 versus 338. So a little bit worse shape overall. I'm sorry, a little bit better shape overall than 6 months ago when it comes to liabilities. There's less to worry about. Okay. Here we go with some cash. Beginning balances. So more cash, 50 billion in cash versus 25 billion in cash since last March, right? You always got to look at the dates. So this is a year-over-year comparison again. So you can, these numbers that are between the big fat lines are between big fat lines for a reason. It's for people who just want to skim through all the little details and get the final numbers. So you don't need to know how much is due to depreciation of amortization. You don't need to know that deferred income tax benefit. Like, who cares, right? You want to see like how much cash you have, how you operating the cash. And here we go. Cash generated by operating activities actually went up. Okay, by 6 billion, 43 billion versus 37 billion. Okay, let's look at some other final numbers here. Cash generated by investing activities, negative 5 billion versus positive 19 billion. Okay, so I guess it's costing them to do investing activities at the moment. I also ran through their research number, so they're spending actually a lot more on R&D, which means research and development. So I guess they're trying to really kick their company in overdrive here for some reason. Maybe they're changing things. So it seems like they purchased a lot of, if you look at this thing here, one sec. I don't know if I can scroll that far down. But purchase of common stock, they actually purchased 39 billion of common stock this March. Instead of last March quarter, they purchased 32 billion. So they're purchasing more stock. And when they purchase more stock, actually that increases the nominal value of the stock. Decreases the total company value, but increases the nominal stock, which is kind of what investors want to see in their portfolio anyway. All right. Total numbers, you kind of can't see them down at the bottom, but cash equivalents, and restricted cash ending balance, 43 billion in cash versus 39 last March. And these are the numbers, right? So just to put it in some perspective, one of the most cash-rich companies right now is Warren Buffett's Berkshire Hathaway, and they have 100 plus billion of cash, while Apple has about 43 billion right now. So that's an interesting number to know, okay? So they can survive for quite some time. They have a huge cash hoard they can burn through for a year without having any income at all. So it's a pretty important thing to note that this company is not going to go bankrupt anytime soon. Now, that's Apple. You saw how many numbers we looked at. You saw everything that we need to know about the company here. And now, whenever you go out and try to purchase a company, it would be useful to just kind of get a glance to just so you know what you're getting into. Okay, so let's just try to find. I'm gonna do this live, right? Meaning I'm not gonna edit. I'm just gonna try to find out, see how difficult it would be for me to find the balance sheet of a random company. Okay, so something that I don't own, and maybe that's something that is popular right now. Well, I mentioned Uber, so maybe we can try Uber. Okay, so I've never searched for Uber, I promise. I'm just gonna search, let's go to Finviz first. I don't even know what the symbol is for Uber. So Uber, I guess it's Uber. So Uber, it looks like it's sitting at $33.62. Now let's take a look at some of these numbers here, the comparison. So a lot of these numbers are missing, so that's not a good sign. But PE's earnings per share, it looks like is negative 7.72. So that's alarming. Oops, to say the least already. So I clicked on the wrong button. Sorry, one sec. But minus 7.72. Percentage-wise, I can't work out the percentages, but the price of the stock is 33, so that's quite a big percentage. So basically, it's not earning, it's losing A lot of money, okay, per share. So I don't know about that. Earnings per share estimate for next year minus 1.55, still a negative number. Earnings per share next quarter minus 0.8. If you multiply it by 4, you'll get 2.4 or 2.5 even for the year. So that's not very good at all. Earnings per share, it looks like, is up 63%. So it is in positive territory. So that's great. But the problem is that it's a long way from digging that hole from negative 7.72. I mean, that's rough. But it is positive that it's showing progress. Okay, so earnings per share past 5 years is minus 66%. That is really bad. I mean, I've actually never looked at Uber. So I would never be investing in this company unless these numbers turn positive. Past 5 years, negative 66.4%. Okay, the sales are increased by 100%, so that's, I guess, positive. Sales, okay, fine. Earnings per quarterly earnings growth minus 183%. That's also not very promising either. Not promising. Insider ownership 0.4%. That's whatever. Insider transactions, whatever. Institutional, whatever. These are numbers that are important. Remember what they look like in Apple? They were in their 20s, right? We said the magic number is 20. Return on assets, negative 33%. Bad. Uber bad. Return on equity, negative 73%. Uber bad. Return on investment, negative 40%. Uber bad. Gross margin, 33%. Okay. Operating margin, minus 70%. Bad. Profit margin, minus 71%. Bad. Really bad. Let's see. Short flow is 2.84%. That means short flow means that's what percentage of the share, and this gives you the number here, 1.67 billion. What percentage of the company actually market value? I think it's being shorted. Being shorted means basically that you borrow shares to sell them in the market. So you owe somebody those shares. All right, it's kind of complicated. Forget it. If you don't know it yet, just maybe Google it, read up on it. I think it's going to be too much for this video for me to mention. So let's see, any other interesting numbers that pop out here. These are just, I mean, it's very liquid. That's for sure. It's almost as liquid as Apple. So that's good for traders, I guess. The beta is not disclosed. Okay, so far not very good, right? Now I'm going to go into Google and look for Uber balance sheet. And I'm going to look for it at the source, at the company. Okay, so Seeking Alpha, that's not it. Craftco, Zacks, Uber investor relations. I'll type that. Uber Technologies, home investor relations, financials. Okay, there we go. So type in Uber investor relations or the company name investor relations. So you'll probably have a better luck at finding their balance sheet. So here we go. Reports and presentations. This took me just right here. 2020. Yes, please. Q1 press release. Supplemental investigation. Blah blah blah. I want to look at the annual report. So let's see if we can find some numbers here. Annual report. This is not what I was looking for. Whoa, who reads through all that? Really? Okay, we finally hit some numbers. All right, revenue. So this is also in millions, just like Apple. Let's see if we can dig through some of these numbers here. Total costs and expenses. Okay, So let's see, 2015, 16, 17, 18, 19. So you always want to look at the dates. So you're looking at 5 years consecutive numbers here, which the latest one, 2019, is on the right. I'm sure we can find more recent data, but I don't want to bother right now. We can probably find the quarterly balance sheet. So you can, let's see the underlying numbers. We'll skip a lot of the details here. Basic and diluted net income loss per common share. You can see that they've lost 6 billion in 2015, almost 1 billion in 2016. They lost almost 10 billion in 2017. There's no number here for 2018. They lost 6.81 billion in 2019. So far, it's not a very good investment. So far, but you never know. Give it enough time, it'll turn around. Not a sarcastic remark. Okay, let's see. Consolidated balance sheet data. Cool, thank you. Cash and cash equivalents. So they're working with 4 billion in 2015, 10 billion in 2019. It really doesn't tell us much because that's just how much cash they have in hand for, for whatever they need. Total assets, okay, fine. Working capital, whatever. Long-term debt. So they have increased their debt steadily from 1 billion in 2015 to 3 billion 2016 and 17, 6 billion in 2018. They have decreased it a little bit below 6 billion in 2018, but still carry quite a bit of debt there. I guess it's not that much compared to the size of the company, but I guess they keep diluting the shares. I don't know how they're getting their money. Total liabilities. Yeah, total liabilities are steadily increasing. 4 billion, 9 billion, 11 billion, 17 billion, and then a little bit under 17 billion here in 2019. So there's a quite slight uptick, just like we saw in the Finviz data, slight uptick in their numbers here in 2019. All right, total equity deficit, 14 billion here in 2019, positive number, interesting. Now, financial operation highlights. Okay. Or the EBITDA means earnings before taxes and all that stuff. Deductions of all sorts, and let's see. I mean, if they can't even make any earnings, they want to show you the number before earnings and deductions and expenses or whatever. They can't even hit that into positive territory, so that's not a very good sign either. All right, monthly active platform consumption. So they're trying to give you numbers that they're growing the company, and then eventually, because the company is growing in user base, that they could eventually turn that around and monetize it. But we'll see if it happens, right? Okay, well, I think we kind of ran through all the important data. Let's see, revenue. Revenue just means how much money total is coming into the company. So 2017, you see the dates up top. That was 7.9, so 8 billion in revenue. It increased to 11.2 billion and then 14.1 billion in 2019. So this number is definitely going up. So, that's that's a positive. I mean, the size of the company is growing, even though it's costing them billions per year to do it. So we'll find out in the end if it's worth it. But I certainly wouldn't be sticking around to find out. I might buy it once it is profitable. Total cost and expenses. So it's costing them more and more money to do so, right? From 12 billion to 22 billion, 2017 to 2019. Loss from operations. Okay, they lose a lot. Interest expense. They have less interest expense this year than 19 than 18, so that's good. Okay, net income. Net income. All right. So 2017 net income was negative 4 billion. 2018 was 1 billion. and then 2019 is negative 8.5 billion. All right, that should give you some idea of what's going on there in the company. Okay, total revenue, we kind of looked at these numbers. This is just another look. All right, well, it's a bit more confusing than the Apple spreadsheet. I give you that. Maybe because it's not a quarterly report, it's like a total year overview. But you kind of got the idea, right? So you can see that. Give some more numbers in millions here. You kind of get the idea of what's going on in this company. Proxy statement. Let's see if we can click this. I guess it gives you simplified data. Yeah, I mean, look, you can Q1 press release. Okay, there's a more simplified version. You can just click on the press release and just get the numbers here. But I mean, I already went through a lot of numbers. Okay, this is 2020 data, right? Let's see if we can find some financial data here. This is just dealing with bookings. Okay, revenue. Total revenue, 2019, 3 billion, 2020, 3.5 billion, so still growing. Net revenue, okay. 2 billion, 2019, 3.2 billion, 2020. All right, negative earnings. Okay. Change in earnings, that's fine. But you can see that, I mean, this company, total assets, just look at the big numbers here. You can see total assets, they actually had 1 billion less in assets than, in this year, March, rather than last year, December, since last quarter. Total liabilities, more liabilities by 1 billion. Accumulated deficit, total liabilities, they had 31 billion last quarter, they have 30 billion this quarter, so a bit of an uptick, so that's good. We already looked at this number, $500 million more in revenue, so that's nice. All right, I think we've beat this horse to death here. Net loss, 1 billion versus 3 billion here, year over year. Okay. All right, I think we beat this horse to death. You don't need to look at it in that. I mean, I don't need to look at it that much in detail. I already know. So let's go to the Robinhood. We haven't checked this out. Uber and Robinhood. Get a really just quick, fresh look. Looks like the stock was up 3.5% along with the market today. The earnings, you can see that the number here, they're in the negatives, right? When we took a look at Apple, excuse me, let me show you the browser. When we looked at Apple, these numbers here were actually positive. So this just tells you how much it's losing per quarter per share. All right, so this quarter here it lost $4. In Q2 2019, it lost $4 per share. And if the share is worth 33, just losing $4 in one quarter, that's really, really bad, in my opinion. Really bad. Okay, let's look here. Market capitalization 58.3, so it's valued at $58.3 billion. Quite a big company. To give you some perspective, Apple, which is one of the largest companies out there, is valued at 1.37 trillion. Okay, so this is about, less than a 20th of that company in size. It doesn't give you price to earnings because he has no earnings. It doesn't give you a dividend yield because he has no dividend. He has 27,000 employees and is headquartered in San Francisco. Founded in 2009. Well, there you go. That's a hard no for me, this company. So I hope this process wasn't too boring, um, and you get a bit of an idea of what at least I like to look at and what you could be looking at before you pull the trigger on that stock. You may not want to be in a company that's losing money, but maybe after you review the numbers and you see that even though you know that it's losing money each quarter, there's some uptick in activity there. They have some, reduced liability. Maybe there's some financial um, responsibility that's going on in there in their balance sheet. And perhaps you looked at their numbers and you see that their revenue is up, that the user base is up, and whatever. Maybe you believe in that story and you decide that you actually want to pull the trigger, even though you thought it was just a money sinking company. Now you know things are improving in some aspects for the company. It doesn't look too bleak, so maybe you actually want to buy Uber now, even though you see a lot of negative. So it could help you make a decision, right? Only you can make a decision for yourself, I think, in the best way possible. So having all the tools at hand and all the information at hand will make you make that decision, help you make that decision. Now, this is clearly the longest video I've ever made and probably the most boring. So if you're a champion, okay, and you actually sat through the entire video, I'd be really curious if someone actually did. So if you did do that, type in champion in the comment below so I know who you are. Crazy. How do you listen through all these numbers? Anyways, type champion if you listen through all the way. Peace out.